right? We had this low, and then we had this high, and then we had this low, and then we had this high, then we had this low, then we had this high, then we had this low, then we had this high, then we had this low. So this whole section right here, we were just making higher highs and lower lows, higher highs and lower lows, okay? And the key component is when we ended up breaking kind of this level right here. If you look right here, we came back we broke that level. This was the main indicator right here. Okay, so we are going to start on the monthly chart to kind of take a look at what crude oil is definitely doing. Again, no surprise here as we begin to wrap up the month of January 2024. We are definitely in a bull run on crude oil, and by no stretch of the imagination are we looking for any long-term swing trades to the downside. Okay, we only will take scalps to the downside on strong areas of resistance, but we are going to be more bullish traders than we are sellers in this market right now. And again, if you look down at the bottom of the ticker, you're going to see some of the most latest crude oil news that's being released as of this weekend. So let's grab a Fibonacci retracement and let's just kind of take a look where we are at on the monthly. You can see here that based on the monthly, we are getting up to our golden ratio of the 61.8 in that area. So again, a very strong area that we look at. Not only is it a 61.8, but it is also an area where we have seen, right, previous resistance there and previous resistance there. So we definitely will be keeping an eye on that area as we approach that area. And for those of you that might be on smaller devices, that is 83.33 on this trading view chart. And I'm going to do my best to call out pricing based on this chart for some of you that are watching these videos on smaller devices and may not fully see the numbers over on the right. That's the least I can do to help you out. And again, if you don't want to listen to me speaking, you can go down below. You will have closed captioning in over 10 different languages, so you can choose the language of your choice as well. So we are currently at 78.12. That's what we closed according to this chart here. So again, we are just definitely moving up on the monthly, and we want to keep that in mind as we begin to toggle down on time frames. So now we're heading up and we are looking at the weekly time frame. So a couple things to note here is now I'll start kind of branching these out, right? That was our low down here at the bottom, which was 68.07 on this chart. And you can clearly see here now, and now that I've done this on the monthly, I'll get rid of that circle and that circle for now. And again, you can see where we are on the weekly. Again, our 50% Fibonacci retracement is quickly approaching. And one thing you should note on the 50 percentile is that we did see rejection here and we did see previous rejection here. Now, again, just like with any chart on any time frame, understand that charts, I kind of relate it to like people knocking, right? People will knock a couple times, and if they don't answer, they will leave. That's when the charts turn around. But understand that at some point, right, price points do break from the 1 minute chart all the way up to the weekly and monthly chart. So don't get so settled in and defiant on your mindset that price is going to hit the 50 and bounce down all the way again. It might break through, and this is where your risk management comes into place if you do like to trade the 50 percentile. Okay, so again, those are things that you've got to look at as we move forward. So as we dip into the chart a little bit deeper, some of the key areas that we do want to focus on is, yes, we might see a type of teacup situation happen on the 50 where price comes up and then gives us a possible retracement back down. But again, that could probably be short-lived, and then we continue to the top side. We will take a look at that as we go deeper into today's crude oil analysis video. So this is to give you a little perspective, especially for some of those that are longer term swing traders, right, who took positions down at 68 when we were talking about price down there, right? Understand that you may see some resistance now as we approach the 50% Fibonacci level, which we started on the monthly, and we're now seeing it on the weekly as well. Okay, as we go a little bit higher, we'll be talking about the 68, 61.8 area, and again, that was been defined there. And so for the example that I just gave you a few minutes ago, this is a real good example of the teacup. So we had price leave here, come all the way up, give us that short teacup handle, just like when you're drinking a cup of coffee or a cup of tea, right? You hold it by the handle. The handle is not bigger than the actual cup, and then price continue to the upside. So we will probably see that here unless there are some fundamentals that kick into place on one side or the other that obviously will drive price. There was a lot of news on Friday, and that is what drove price first to the downside and then to the upside. Okay, so that is where we are at on the weekly. Now let's head over to our day chart. I want you to focus in on that vertical rectangle that's there with the white arrow. That is the equivalent of 20 pips. And if you can learn to catch 20 pips a day, you are going to be a more consistent and a profitable trader. Now, we currently have a 20 pip challenge that we're helping our folks every day grab 20 pips in our app. But I want to show you just between Thursday and Friday, the number of opportunities that our traders inside our trading club had to grab not only 20, but a whole bunch more. But I want you to focus in on 20. So that's all that you need per day. So going into the chart, we're going to see the chart move. And again, all these were zones that were provided inside of the app for traders to use. So again, I want you to focus in on that little rectangle with the white arrow. And as price breaks this trend line and continues to head up, I just want you to see the very small, minute area that you just need once a day. That's it, to grab 20 pips in the market in either direction from our support and resistance areas so that you can learn to be a consistent and profitable trader. The reason why I'm leaving that mark on there, because as you can see the price action going up, going down, you only need one candle movement that you grab in the right direction when we're giving you our support and resistance zones for you to take buys and sell from. We are lowering your risk. We are giving you great opportunity to be able to come into the market and find 20 pips a day. And this is powerful because I believe that if you are trading in a good, healthy community with people that care about you and your success, not about creating flashy videos, not about charging you $100 a month for Discords or any other channels that people don't even respond to, but making it affordable for you to come in and learn with a group of traders that all believe in the same mission, then we are going to have synergy and we are going to be able to move forward together as a group. And that is going to bring you a positive trading experience. So I hope that at some point you will check out the resources that we have available in the video links, or that you just visit theprofessortrades.com. Take a look at it and see if it's a good fit for you. Come in, Try it for 30 days, and I can guarantee you, listen, I can guarantee you that I'm going to get you your pips at a fraction of a cost for less than $1 a day. And we are going to start you on your journey to being successful. And the best part about it, it's not me. It's going to be the other traders that you meet inside of our community. To kind of see here that, again, we left that area. We're approaching the 50 percentile. And again, we're just going to call it $80 on this chart. You know, crude oil loves the zeros and the 0.5 zeros. So we are looking at about $80 a barrel on this chart here. We will probably see another level of resistance. Now, we will be talking about the gap here in just a little bit. Again, for those of you that are familiar with gap trading, or if you're not familiar with gap trading, we'll be discussing that as we move forward here in the video. We'll give you some options on how to trade it and why you should or should not trade it. And a lot of that will depend on your trading style, your risk management, and your trading psychology as well. But we will get to that in just a few minutes. So hang in there. Okay, so again, on the daily time frame, right, we are again approaching that possible teacup scenario where we may get some resistance up in this area. You know, and truly, if we look here, we are probably not going to buy again. Well, we're actually not going to buy from here, but we wouldn't buy again until we get price to close above this area. Let's change the color, okay, and then give us kind of a retest down before we head back up again, okay? In my opinion, you should really avoid getting into a buy at this situation because, again, price can just kind of reverse on you, right? I was trying to find a funny emoji to just drop in there. But anyways, you don't want to go ahead and buy from here. So I'll just kind of tell you, don't buy here because we do have resistance coming up here very quickly. And we're going to be talking about that gap in just a minute. So as we look at the chart now, our game plan is going to be, even though we're still on the daily time frame, right? This is going to be a key area. And I'm going to go ahead and mark it here because as we move down on time frames, I want to have this marked up to exactly where I want it to be. Okay, so that is going to be a crucial area that we look at what price is doing with price action when it reaches near $80 a barrel on this trading view chart. So let's now head over to our 8-hour time frame. And again, just another reason why, you know, we should continue bullish. We did break this level right here, and we closed above that level right there. So it would not shock me that we even gap way up here for maybe people that have tons of sell contracts in this area, that they just gap and spike maybe even $1 or $2 worth higher to knock out all these sellers who were in with stop losses before the market closed. That would be my guess, unless any major news comes out from the Middle East or anywhere else. Even that being said, we may see price gap up to the upside for those individuals that were taking sell positions from this level. So when you look at it from here, again, no question, right? Our momentum is much, much higher, right? We began taking sells in our trading group down in this area, down in this area, and then down in this area. The price action was just continuing from this point to just continue to climb on the 4, the 1, the 8-hour chart. And we'll show you that a little bit clearer as we move down in time frames. So this is going to be a crucial area to focus on. Now, as we jump into our 4-hour chart, again, just more validation there. And this is kind of where I want to do just a few minutes for those of you that are still learning this, and even experienced folks sometimes just, you know, need reminders, right? We had this low, and then we had this high, and then we had this low, and then we had this high, then we had this low, then we had this high, then we had this low, then we had this high, then we had this low. So this whole section right here, we were just making higher highs and lower lows, higher highs and lower lows. Okay. And the key component is when we ended up breaking kind of this level right here. If you look right here, we came back we broke that level. This was the main indicator right here that we were possibly going to start a new uptrend. Now we see here, same thing kind of happened and we came back down, right? But again, we can only come back down to certain levels so many times before the pattern has to be broken. So this is when we talk about in my group about if you don't buy the impulse for 20 pips or more, wait for the retest, which did happen right here. It was a perfect retest off that 72.80-ish area. Then we took off again, and then we dipped back down. And I believe it was in this dip that we dropped a 60 to 70% Fibonacci buy position. Yep, it was a 61.8. We dropped that fib level and chart in the group as well. And again, we're trading a lot of fibs and being very successful in the group at almost every time frame, but we love the higher time frames especially. And then again, we just took off from there. So, these are things that is definitely going to help you speed up the learning curve when you're in a community with folks who are looking at the same thing, charting the same thing, and talking about it all day within our chat zone as well. For those of you that are in different time zones, different countries, I think I've got more folks in the trading group from other countries than in the US. And that is awesome. Awesome to see. With now over 150 members in just over 7 weeks, they're seeing the massive value and they're sharing, which is amazing. And a shout out to one of our members who just created a TradingView script for some buy and sells for those that want to trade with the SAR for extra confirmation. Shout out to you for creating that for us inside of our group as well. So we are here in a key area that we are looking at. And so now we begin to drop into the 1 hour. Now we're going to begin to look at price action at a little bit differently than we did before, right? Because now if you're looking for opportunities, these are where the opportunities will begin to develop. And so when we look at this 1 hour, and again, not assuming where we may or may not gap, okay? We understand that we broke that level right there for confirmation. We talked about that. And so the first thing I want to kind of take a look at is where we took off from here and where price closed. Again, we are probably going to gap up, but let's say that we kind of gap down. Look at where this Fibonacci level sits. It sits perfectly kind of right in a liquidity zone and within that 70 percentile that we talk so much about it. We love the 61.8, but what we've noticed a lot with crude oil, right, it loves coming even deeper into the retracement area, especially when you have these big liquidity candles, very few wicks to the bottom side here on this one, where they love to come back and grab that institutional money. So if we were to gap down somewhere in this vicinity, right, and I'm going to go ahead and make this red to keep it consistent, we will probably see price come down to this level. So they grab liquidity and then go back up to close that gap. So in the sell gap scenario where they open up bearish on Sunday market open, and just so you can get an idea for those of you who are watching on a smaller device, this is about 77.21, where I'm just giving you the example. If price was to gap down here, again, we did close at 78.12. So if we gapped 50 cents to $1 down, we could see price coming back to this Fibonacci level, zone level, liquidity level, and then continuing back up to the upside. So this would be a possible scenario if we do substantially gap down. Okay, so that is kind of the 1 hour view. Again, we are looking at different levels, and as we get to the 1 hour and less, I kind of like to mark up again those psychological even numbers because they are very important. This one here at the key area, 79.50 to 80, but this 79, right? If we head over to the left, we can see that, again, price has broken it on multiple occasions. That's why I like the higher area marked up here near 80, okay, closer to 80, because on the 1 hour chart, you can see that, the 79 has not really held as much. So price should be going higher into that pink box area. And again, we will be updating you in the app, just like we do each and every day, 4 to 6 times a day as well. So that is kind of where we are at. Now, let's take a look at the 15-minute chart. And again, this is where we conduct many of our entries. And again, we are kind of right here in this position on the 15-minute chart. So let me go over your scenarios as we do market open, right? This would be the next key level that we look for price to possibly come down into and then give us another push up if that's the case. And when you're looking at, this type of trading and you see these candles, the deeper that you allow price to move in these fib levels, the better. Like if you want to be extra conservative, I would tell you to move your box down even a little bit lower, because now you see how everything changes from time frame to time frame. Look at where prices come to. We've been here on multiple occasions, so we have that proven support level. This was a complete fake out, right? So that is going to happen, right? False trend, false breakout, that is going to happen, but it happens more so than not on these smaller time frames. But because we do have, previous support here, previous resistance, previous support here, right? This would be an area, it's never an exact point, that we would look for another buy opportunity if we just shoot down here at market open Sunday into London session as well, okay? If we give you the scenario of the other gap scenario, and this square now has gotten a little bit fatter, right? Because we were at a different time frame. So this square now, if it gaps up to the top side, okay, then what we want to do is I'm going to go ahead and just create a new square. If we gap up to the top side, up in this area, and we'll make this green, then what we're looking at is price coming up to these levels that we talked about and then reversing to close the gap. So we are going to go ahead and mark this area right here as our gap, and because that is where price closed on Friday. And so for those of you that have never traded the gap, let me just give you what I consider my advice to you. So I used to trade crude oil gap when it was about 20 or 30 points on the gap. But what we're seeing now in today's markets, there's a lot more manipulation, I believe, than ever before. So we're only trading gaps if there's a 50 pip difference or a 50 point difference or higher. Usually what's going to happen with crude oil is that when the market opens, and let's say it opens up here, it usually will run away for a while from the market gap. And then within a few minutes, hours, days, which usually doesn't happen. Usually within 24 hours, crude oil was always accustomed to coming back to closing the gap if it was in that scenario up there. Okay, on the sell scenario, it was just opposite. It would open up, it would run away for a while, and then it would reverse and close within a few minutes, hours, or days. So because of that, this is a Sunday position. If there's 50 cents or more, don't get in initially, because for many of you, depending on your brokers, the spreads are increased in that first hour of trading. Wait till the hour of trading is done. Let the spreads come back to normal. Again, depending on your broker, where they are. My broker is only a 1 pip in session, out of session, usually between 2 to 4, depending on it. And if you need that broker information, that'll be down in the video description area as well. You can check it out, or check out all the other brokers that are available as well, and let it run away for you. And then when you get that 50 to a full dollar threshold, somewhere that you feel comfortable, that's where you enter that buy or sell. But understand that that price there could actually stay open for a few minutes, for a few hours, or even for a few days, right? We've got some natural gas traders. We're providing natural gas charts in our group as well. Well, there's been a gap there that's now going on 3 weeks. Very uncommon. But what's happening on natural gas is also very uncommon. There's a lot of fundamentals dropping that, and I'll be dropping the natural gas chart and full analysis inside the app as well, coming up in the next 24 to 48 hours. So understand that let price run away. And you have to understand that this could be a scenario that you need to hold for a bit. So if you've got a small account, if you can't weather being in drawdown, do not trade the gap, right? You might as well just wait till price settles and do not trade the gap, because the gap, again, has not been closing very quickly. It's been generating some great profits, gives you opportunities for maybe multiple entries. But the key thing to the gap at the beginning of the market open is to let your spreads come down if that impacts you, and see if it runs away for a little bit. Okay. And again, I personally would not encourage you to take any gap unless it's 50 points or more, unless you have an account and a stomach to hold that this thing can stay open for a few minutes, a few hours, or even a few days. Okay. So that's kind of what we were looking at with crude oil analysis today. Again, if you got some value on today's video, you can definitely hit that like button. If you're brand new, subscribe. And for all of you, make sure you turn on your notifications bell, because that's going to alert you when we go live and when we produce and publish these videos as well. A quick shout out to all of you that are on the YouTube membership as well. You're getting a little bit of value there. But if you really want to increase your value, if you really want to increase the community, if you really want to be given, hate to use the word guarantee, but it's been working, pips daily with our 20 pip challenge, we're giving you the growth chart. We're giving you everything you need to be successful. It's going to do everything for you. We're in there. We're trading live. We're providing charts. We're providing value. Then I'm going to encourage you to check out our app for less than $1 a day. Trust me, the money being made by this just covers about 80% to 90% of the fees to run this app behind the scenes, and the network and everything else. And the price point is so dirt cheap because I wanted to make it affordable and applicable to everyone who is in trading, regardless of what country you are in, because of the currency exchanges and everything else. That's why you probably won't find another price point like that anywhere on YouTube or in the industry that's charging you less than $1 a day for the value you're getting. And here's the best part. You can jump in. If you don't like it, just hit the cancel button and you can leave within 30 days. No contracts, no worries, no pressures. Come in, check it out. And if you don't like it, you could always cancel. And because you stayed to the end, for those of you that stayed to the end, if you join that trading club, okay, if you join the trading club as a result of watching this video and being here now, I'm going to throw in a 1-hour coaching call with you. Now, you're going to pay $28 a month, or you can pay $21 a month for the annual plan and get it over with. So if at anything else that you join, you're getting a 1-hour coaching call with me. We'll talk about whatever you want, support resistance. You ask questions and I'll give you my best possible answer that I know for 1 hour. So if anything else, you're getting a coaching call for $28 if you do the monthly plan for 1 month, plus all the added value that you're going to get as well. Okay. So links will be provided either on the QR code that you see somewhere here on the screen in the upper corner, down below in the video link as well, or you can just go to theprofessortradesplural.com, and that is going to reroute you over to our app as well. It's an app in a network that you'll be able to use on Android, iOS, or your web browser. So you can log in on a regular computer or laptop like many other folks do on an iPad, and use the bigger, wider screen experience, because it can be used through all three as an app on both devices or a web browser, which is awesome to have for those of you that are older like me who love to have larger screens. Okay, I hope you got some value today. If you're in the app, we'll see you in there. If not, check it out. And if not, let me know, ask questions. I get back to everyone on YouTube within 24 hours. I'll do my best to guide you in the right direction. Okay? Because knowledge is powerful, and you and your family deserve to be surrounded with people who care about you moving forward, regardless if you make $1 or $100,000. It's about building community and being like-minded. And I always finish my videos by reminding our folks, be kind to someone today, right? Text message someone, call someone, shake someone's hand, say good morning, smile, fix an old relationship, apologize even if you felt you weren't wrong, buy a cup of coffee for someone. When you do that, the universe has a way of paying it forward to you, not when you want it, but when you least expect it. So make sure that you are kind to someone today. Thanks for watching. We'll see you on the next video.